ultimately money is a $300 trillion total addressable market. This is by far the largest market in the world. Nothing comes close. Nothing else is, the total value of, I think the NASDAQ is, I think, around $40 trillion. So the S&P 500, the 500 companies that make up the S&P combined are also, I think, around $40 trillion. So the total addressable market for just money is 5 or 6 or 7 times larger than all of the S&P 500 companies combined. So that's just such an enormous magnitude that all of these other use cases, I mean, I'm skeptical that they're going to have any kind of demand. I think they've been mainly used just to pump tokens. But even if we go along with all of those narratives, real estate on the blockchain and blackjack on the blockchain and collectibles on the blockchain and Pokemon cards on the blockchain, even if you're going to give them all of their most bullish scenario possible, it's still a rounding error next to the total addressable market for Bitcoin. For me, it's as inconsequential as somebody saying, I'm going to start painting on dollar bills and I'm going to start selling my dollar bills for more than $1. And so, yeah, maybe you do that. Maybe some artist in New York City manages to pull this off and start selling dollar bills for $2 because he paints something nice on them. It's completely and utterly inconsequential to the dollar. Mm-hmm. And the market for the dollar. Mm-hmm. It's just a very, very tiny little thing. And yeah, with altcoins, I also think it's really been a couple of rough years for altcoins, and I think it's going to continue that way. I don't see a compelling value accrual narrative for any of the altcoins. Their narratives are novelty, flash in the pan, short term, and you can get marketing behind it for a while, but after a while, the supply keeps going up.
7 years ago, Saifedean Ammous, a Bitcoin maximalist and author of the Bitcoin Standard, published a book when Bitcoin was still hovering around $7,000. Fast forward to today, and Bitcoin has exploded past $93,000, a staggering 13x increase. Back then, most people dismissed Bitcoin as a crazy idea, but look at it now. Saifedean Ammous argues that we're still in the early days. Bitcoin's true success isn't about how many people download an app. It's about something far bigger: money, the colossal $300 trillion market spread across fiat currencies, bonds, gold, and cash-like assets. Right now, Bitcoin holds about $2 trillion of that. It's an impressive rise, yes, the fastest any asset has ever grown. But it's still just a small slice of the pie. Saifedean believes that one day, Bitcoin could become the world's true monetary standard, commanding tens, even hundreds of trillions. But will this happen overnight? No, it'll take years. Changing how the world stores and grows its wealth is no small feat. One thing, however, is certain. Those who accumulate Bitcoin now will see their wealth grow. Those who don't, their wealth will diminish. Now, let's dive deeper into Saifedean Ammous's vision, exploring Bitcoin's ultimate shift in global finance. We'll discuss the role of gold, Bitcoin's potential as a strategic reserve, the impact of Bitcoin ETFs, and what's really happening with altcoins. But before we get back into it, take a moment to like this video, drop a comment below, and share it with someone who needs to hear this. And don't forget to subscribe for more updates on Bitcoin and the crypto market. Thank you and enjoy the video.
A year ago, nobody had expected any of this stuff in April. Trump was not talking about it. I would have thought that if at this point they'd followed through with this strategy, I would have thought it would have been a bigger deal. But similarly, we expected that the first corporation to buy Bitcoin was going to cause a run among corporations. We thought that the first government that buys Bitcoin was going to do that. And yet, it's worked out well for El Salvador. It's worked out well for MicroStrategy, but there haven't been a lot of copycats. And I think it's just the way that Bitcoin is. People need to take their time to really get it. So I'm kind of underwhelmed by the response in a sense. So you would have imagined that more countries would have started paying attention, given that Trump has been doing this. But in a sense, yeah, there was a lot of talk about Bitcoin strategic reserve, purchasing Bitcoin and so on. But ultimately, all that has really happened is that they've just kept the Bitcoins that they've had, which isn't very different from the policy that was being adopted previously, because previously it was ambiguous. It wasn't clear whether they were going to keep them or sell them, and they were selling them unannounced. Now it's clear that they're going to keep them, which I think is just on a very simple market dynamic level is bullish for the price, because you're not going to be getting a dump of 10,000 coins on a random Tuesday morning without anybody finding out. So I believe it's likely going to be bullish in the long term, but it's not clear that the administration is really convinced of the idea of using Bitcoin as a strategic reserve or as a replacement for the dollar. This is the thing. So they're continuously saying we're going to use Bitcoin to enforce dollar hegemony. So that message has not really, the message of Bitcoin as an alternative is not really being pushed. And it's, I don't particularly find that very convincing. I don't think you can use Bitcoin to bolster the dollar. I think they're competing. It's a zero-sum game, and there is no prize for second place.
What about gold? And gold did pretty well last year. Bitcoin did better. But to start 2025, gold has done very, very well. It's up like 30%, 31%. Bitcoin is kind of sideways for the most part. How do you look at that playing into the equation?
I'm skeptical that gold can continue its rally significantly for a long time. I think the fundamental dynamics of the gold market have been broken by the fact that gold is just not used as money in a practical sense. So yeah, you can hold it, you can buy it, you can put it under your mattress, you can store it in a financial institution, but you can't make payments with gold. You can't, there are no gold banks. And so therefore, it's always going to be separate from your cash balance. It's always going to be separate from the money that you can use for settling trade. And that, for me, prevents it from appreciating significantly, prevents it from accumulating enough monetary premium. And I think that's why it's been used a lot more during the last century in industry. And a lot of the gold bugs will tell you that, gold, it's good for gold that it's used in electronics, that it's used in jewelry. I think that's actually very bearish for gold from a monetary perspective. As I discussed in the Bitcoin Standard, what made gold money was the fact that it has a very large stockpile compared to its annual production. And so this idea that annual production is always a small fraction of existing liquid stockpiles that are used as money is what makes it a great money. Because then if the people start using it more as a store of value, the gold miners can't increase the supply significantly. But if you start taking the liquid stockpile out, the gold out of the liquid stockpile and putting it into industrial uses, you're effectively reducing the size of the stockpile. And therefore, the new production is a more significant part of these stockpiles. And so therefore, it becomes more inflationary as a monetary asset. And that's what's been happening over the last century. As gold's been demonetized, the more you see it used in non-monetary uses, the less of a money it is, in a sense, and the more of an industrial metal it is. And that's how silver was demonetized. That's how copper and iron before that were demonetized. So I think this is still the case with gold, even with this appreciation. If you look in the long term, I think it's not really caught up to dollar inflation. I don't think gold has held its value well compared to the amount of devaluation of the dollar. So if you were to measure the price of real estate in terms of gold, it's still gone up. Real estate has gone up in terms of gold in most places. And that's because gold has not really managed to keep up, because it's not been accruing monetary premium over time. So I'd be skeptical of its ability to continue to hold on to value for a long time, as long as it's not possible to use gold as money. And it doesn't look like that's going to change. We don't see it happening in the US. We don't see it happening in any of the other countries that could be working on an alternative monetary system. You don't hear about China or India or Russia setting up gold payment networks, gold settlement infrastructure, places for settling gold amongst each other. The global gold market still relies on the London Bullion Association, which is very centralized and very shady as well. So there are a lot of shenanigans going on in the gold market. You can't verify gold like you can with Bitcoin. You can't run your own gold full node. And so you're always at the mercy of centralized forces. So I don't necessarily think that has changed much. And I think this recent bull run, it's good for the gold bugs who have suffered a lot over the past couple of decades with watching pretty much everything go up except gold and silver. So that's encouraging for them, but I don't see it being sustained for a very long time.
What has to change for the central banks that are buying gold right now to start buying Bitcoin, you think?
I think what they need to do is if they start thinking about moving to a gold standard and then start operationally working on making gold trade work on an international level, then they'll start thinking about the real cost of making these things happen. And then the value proposition of Bitcoin will become apparent for them.
The ETFs have come out, have been wildly popular. Number one, financial product ever launched on Wall Street. There seems to be more of a financialization of Bitcoin in the industry in general. I always joke that Larry Fink from Blackrock is now Bitcoin CMO, like doing a fantastic job. He goes out, flight to safety, whatever, flight to quality. Is it a net positive? Like, do you think, even though I think like the hardcore Bitcoiner mentality is self-custody, run your full node, all the things that are kind of like anti-Wall Street, frankly, but do we still think that they've been a net positive to Bitcoin in the industry?
I think so. I'd say that they are a net positive. It's just more demand for Bitcoin, more liquidity. Ultimately, money is a game for cash balances. And the bigger the cash balance, the bigger the liquidity, and the more that something can function as money. So you want more people to be holding Bitcoin. Yes, I would prefer if everybody held their own Bitcoin with their own private keys. But I think people, my fellow hardcore Bitcoiners, we need to recognize that Bitcoin is permissionless. And that means that you can't stop people from selling IOUs for their Bitcoin. There's no way on the protocol level that you could force people to hold their own private keys. They can hold their own private keys and then sell access to the Bitcoin without selling the private key. And that's just the way it is. So we can't stop BlackRock from buying Bitcoin. We can't stop anybody from buying Bitcoin for other people. It's inevitable. And it's just the way that the network scales. Let's face it, there's not enough room for everybody to be transacting on chain on Bitcoin. So this is inevitable. And, it's important for Bitcoin security that it be decentralized, but we don't need it to be decentralized to the point where everybody's coffee transaction is registered on chain. We need it to be decentralized to the point where nobody can change the supply, nobody can censor transactions. And that's a huge difference. So we don't need to have a couple of trillion transactions on chain every day. We can do with 500,000 transactions, the most important 500,000 transactions or 1 million transactions on chain. And that would be likely enough to maintain its security model. And ultimately, all of the stuff about it threatening Bitcoin, I don't really see it as being a very credible threat for the very simple reason, which is that these people become invested in Bitcoin. They have an interest in maintaining it. So compromising the network is going to compromise their investment. So you don't have to like Larry Fink. You don't have to think that he has the best intentions in the world, but he is out there looking out for his bags. And now his bags are Bitcoin. So he's going to be looking out for Bitcoin.
Saifedean Ammous believes we're standing at the edge of a new financial era, one where Bitcoin will soon become a multi-trillion-dollar asset. As more people slowly capitulate and adopt Bitcoin, he sees this future unfolding faster than many expect. But what about you? Do you see Bitcoin reaching those heights in the not-so-distant future? And here's another thought. With giants like BlackRock and MicroStrategy holding massive amounts of Bitcoin, could we be witnessing the rise of a new kind of monopoly? It's a strange twist, considering that from Satoshi's very first block, everyone had an equal shot, a fair chance to buy or mine Bitcoin early on. I'd love to hear what you think. Drop your thoughts in the comments below. And if you're enjoying the journey with us, take a second to like the video and share it with someone who needs to hear this. If you haven't already, make sure you subscribe for more in-depth updates on Bitcoin and the crypto market. Thanks for watching, and I'll see you in the next one.